Good morning, everyone. It's Alyssa Corman-Kentry reporting to you live from our newsroom in Los Angeles. It is Wednesday, December 19th, and on today's show, we're taking a look at GlaxoSmithKline as well as FedEx and Atlassian. So taking a look at the major indexes first, we are up nicely across the board. The Nasdaq up about 1.1%, while the S&P 500 is up 1%, and the Dow up almost as much as that as well. So we're looking good today, but can you put this in the perspective of how we ended up closing yesterday?
Well, so we're basically still in the early stages of a rally attempt for the Nasdaq and the S&P 500. The bulls, of course, are hoping for a nice rally into the end of the year. There seems to be a lot of bearish sentiment in the market, but a lot of people also talking about very oversold conditions for the market. So Nasdaq up 1% in the early going Wednesday, and again, we're still early in another rally attempt. We saw a couple of follow-through days for the Nasdaq recently that really didn't pan out, and well, we also have a Fed meeting today at 2 p.m. Eastern, where we'll get another decision on interest rates. So there could be some fireworks. We'll see.
That's right. Potentially a catalyst in afternoon trade. We will definitely be keeping an eye on that. And taking a look at some stocks here, we have GlaxoSmithKline up about 3.4% in heavy volume right now on news that it is combining its consumer health business with Pfizer, each taking a stake in that combined company, and then the plan is to spin that off later. And some of those brands as a part of that deal include Advil, Tums, Cincinnati. So these are consumer health brands that a lot of us are familiar with. So a big deal here with Pfizer, one of the Dow stocks.
Yeah. So GlaxoSmithKline, a UK pharmaceuticals giant, and market was pretty enthusiastic about this deal early on. Shares of Glaxo were up 6-7% in pre-market trading. It's given back a lot of those gains, but Glaxo is talking about a lot of cost savings, and they're going to own about 2/3 of this new venture with Pfizer, and so that's a big headline. Shares of Pfizer not really reacting much to the news. They had been actually trying to get rid of their over-the-counter business for some time. So a deal finally came to fruition today, but so it's a big headline.
But as far as buying stocks in general, we don't yet know, we don't have clarity on the market's direction. So that's kind of the overall tone. But for GlaxoSmithKline, even though it is up in nice volume on the news, the Cancelim style of trading doesn't advocate for buying on just any old gap up.
No, because this again, we've been talking about a lot of ugly stock charts in the market, and Glaxo is another one. The 50-day moving average, the 200-day moving average recently converged. Still far off its high, and good day for the stock today, but a lot of selling pressure in Glaxo recently for sure.
That's right, and the holidays are right around the corner, so that means that a lot of packages are being shipped and delivered. So we are taking a look at FedEx here. That stock gapping down about 10% in heavy volume after issuing its earnings report. It missed on the bottom line and lowered its earnings outlook here as well. So not a good report from FedEx.
No, and the stock is down 27% so far in the month of December. And you look at a company the size of FedEx, that is just a very, very big price decline for the month of December. But the selling first started to appear in FedEx in early December. There was some negative analyst commentary reminding investors that Amazon getting into the express air delivery, is probably ultimately going to be a problem for FedEx. And then their CEO of FedEx Express announced kind of strange timing for his retirement at the end of this year, right in the middle of the holiday shopping season. So the market didn't really like that either. So this is a stock that's been under a lot of selling pressure ahead of the numbers. And again, the stock so far in December down 27%. So a lot of serious questions about this company's earnings power going forward.
That's right, a very steep price decline there? Well, we talked a little bit earlier about the importance of buying stocks that are forming proper base patterns, and also the fundamentals need to be there as well. Well, we do have Atlassian forming a cup with handle base. It is in the computer software enterprise group. And what do you think of this base pattern here, Ken? How's it looking?
Well, there's no question it's one of the better looking charts in the market right now at a time when a lot of growth stocks, again, have these 50-day and 200-day moving average lines that are converged, or even the 50-day below the 200-day. You can see with Atlassian, the 50-day line is still holding comfortably above the 200-day moving average, and the handle that the stock's forming is also above the 50-day moving average. So you've got a pretty clear identifiable buy point here of 89.92. Big reason why the Nasdaq is up 1% today. A lot of software names working well. A lot of software stocks outperforming again today. So this is definitely a good one for the watch list. Fundamentals pretty clear in the enterprise software group. A lot of visibility, big growth prospects. So not surprising to see a lot of these stocks holding up well.
That's right. So as this one is on the watch list, what would we want to look for going forward? We do have a relative strength line that is near highs, but not quite at highs. But that's still pretty impressive given that the stock is trading pretty far off of its all-time high.
Yeah, I mean, if Atlassian can keep moving towards that buy point of 89.92, it's likely you're going to see that relative strength line moving higher along with the stock. So this is a good-looking chart. But again, we're still in a market correction. So even though the Nasdaq is up nicely today, and showing early signs that it's a pretty solid rally attempt, it's a very risky environment for new buys, and you definitely want to get that buy signal from the market before you start wading into stocks like Atlassian.
Exactly. Well, this is one to keep an eye on, and it's trading about 9% below potential buy point. All right, everyone, thanks for joining us. We want to give you a heads up that there is a webinar going down at 11:30 a.m. Pacific. So make sure you head over to investors.com to sign up for that webinar at investors.com/webinar. Our very own Ed Carson and Justin Nielsen breaking down 2018 and looking into 2019, what you should be looking at. So very special webinar coming up. And we did mention a YouTube AMA. Ken and I will be doing that in the new year. We want to give everyone more time to send in those questions. So we'll send out more information on that later. But for now, make sure to go to investors.com and sign up for that webinar. You don't want to miss it. Thanks so much for watching, everyone, and we'll see you back here tomorrow.